on Business Incorporated today. Kenya GDP grew by 9.9% in the third quarter of 2021. New electricity tariff takes effect in Zimbabwe. And we look ahead at drivers of Africa's economy in 2022. Happy New Year, everyone. Welcome to 2022. Business Incorporated promises to keep you up to date on happenings in the world of business all through the year, beginning from this very first one in the year. You're welcome. I'm Ini John McCorwell. As usual, let's see how the markets are faring this first trading day in the year. In Africa, major stock markets we track were mostly positive at intraday. Nigeria's stock market is closed for today for the New Year holiday, but the NGX rose higher by 2.16%, while South Africa's GSE index was up 0.38%. On the flip side, Egypt's EJX 30 fell by 0.09%. Meanwhile, Kenya's main index closed positive in Friday's trading session. It was up almost 1%. Meanwhile, negative investor sentiments were seen at intraday trading in the Middle East. Both Abu Dhabi and Dubai's indexes dropped 0.60% and 0.32% each. Elsewhere within the region, Saudi Arabia's market index fell 0.35%, while the Qatari index posted a 0.43% gain at intraday. Let's go to Europe now. Stocks expected to open broadly higher in the first trading day of the new year. Markets in the UK and Ireland are closed for the New Year holiday, which means trading volumes in the region could be thinner today. But we have Rob Watts joining us from Berlin to give us details. Hello, Rob. Good to see you. And it's the first trading day of the year. What are we expecting?
Well, investors will be hoping for 2022 to be as much of a bumper year in Europe as 2021 was. The benchmark indexes in Frankfurt, Paris and London all saw big overall gains over the past 12 months. That have limited those gains recently are carrying over into 2022. They include, for example, rising inflation across Europe as economies rebound from the depths of the pandemic. There's also the removal of central bank stimulus over the coming months too. But the big defining factor at the start of the year is the Omicron variant of coronavirus. It is driving record case numbers in the UK at the moment, which hurt London stocks last week. It's also now the dominant variant in France, and it's expected to become the dominant variant here in Germany in the coming weeks. So the threat of further restrictions is hanging over many European businesses' heads. However, investors have been taking hope in research that suggests the variant is less likely to result in hospitalization than previous dominant variants here.
And new research suggests that German households are the richest they've ever been. What's the story there, especially at a time like this?
From research this comes from research carried out by DZ Bank here in Germany. It's found that Germans have been saving significantly more during the pandemic. Because of restrictions over the past 2 years, people have been able to go out less, to spend less in stores, to spend less on eating out or going to the cinema, for example, and to spend less on traveling as well. People have also been limiting their spending because of their uncertain job prospects during the pandemic. So it's estimated that during 2021, for every 100 euros of disposable income Germans earned, they set aside 15 euros, be it in a bank account or in securities like shares and funds. In 2020, during the first year of the pandemic, it was even higher than that, actually. It was more than 16 euros. So overall, financial assets for German households increased by 7% over the past year, according to DZ Bank, to a record 7.7 trillion euros, which is indeed the highest it's ever been, meaning German households are the richest they've ever been.
Wow, what an irony at a time like this. Well, what are Germans expecting from their new government this year when we talk about the deal with pandemic and pensions?
Well, as the new year begins, the polling company INSA asked 2,000 Germans what they thought their government's priorities should be over the next 12 months. And there was one clear winner. And most of them, 61%, said that combating the pandemic should be a priority. That doesn't really come as a surprise, does it? With Germany still reporting tens of thousands of cases every day, and with the highly contagious Omicron variant taking hold. What is a little more surprising is what comes second on the list, and that is the protection of people's pensions. In fact, the survey for the Bild am Sonntag newspaper suggests Germans are highly focused on protecting their own money during 2022. Key priorities include, for example, keeping property prices affordable and also keeping energy costs down. All of these things come higher up the list than tackling climate change. Now, that's despite a huge amount of talk about this in recent months, particularly following the COP26 climate summit, but the environment only ranks 6th among what Germans want their government's priorities to be during 2022.
Well, I guess self-protection and preservation comes in first. Thank you so much, Rob, and enjoy the rest of your day. We move to Asia now, where shares were mixed today as trading in 2022 kicked off with some major markets in the region closed. Hong Kong's Hang Seng Index shed earlier gains and fell into negative territory, declining 0.74% as of its final hour of trading. Trading in the shares and structured products of debt-ridden Chinese developer China Evergrande Group was halted in Hong Kong today, and that's according to exchange notice. No immediate reason was given for this halt. Hong Kong listed shares of Evergrande-related firms were mixed. China Evergrande New Energy Vehicle Group soared by almost 13%, while Evergrande Property Services was unchanged. Other property stocks in Hong Kong also declined, with shares of Country Garden falling over 3%, while Sunac plunged more than 9%. The Hang Seng Properties Index traded 1.16% lower. Meanwhile, shares of Chinese artificial intelligence firm SenseTime soared by almost 29% after seeing a strong debut in Hong Kong last week. Elsewhere, South Korea's Kospi gained 0.37% to close at almost 3,000 points, while the takes in Taiwan advanced 0.28% on the day to 18,270. Over in Southeast Asia, the Straits Times Index in Singapore climbed 0.28%. In afternoon trade, MCSI's Broadex Index of Asia Pacific shares outside Japan dipped 0.03%. In the United States, stocks futures rose early today as Wall Street looked to start off 2022 on solid footing. Futures tied to the Dow Jones Industrial Average rose 104 points, while those for S&P 500 advanced 0.32% and Nasdaq 100 gained about 0.4%. The move in futures comes after markets closed out a strong 2021 last week. The S&P 500 rose nearly 27% for the year, with the Nasdaq Composite and Dow also posting large returns. The first week of the year will be a busy one for economic data, with the key December jobs report slated for Friday morning. On Monday, investors will get updated looks at manufacturing activity and construction spending. Inflation and monetary policy are also expected to be key themes for this year, as investors expect the Federal Reserve to hike rates multiple times in coming year to help cool the rise in prices for consumers. Oil prices now, it's firm today as the market kicked off this year on the positive note, with suppliers in focus ahead of tomorrow's OPEC Plus meeting. Although surging COVID-19 cases continue to dent demand sentiment. Brent crude added 56 cents to $78.34 a barrel, while U.S. West Texas Intermediate crude futures gained 52 cents to $75.73 a barrel. Libya State Oil Firm has announced that the country's oil output would be reduced by 200,000 barrels per day for a week, and that's because of maintenance on the main pipeline between the Samar and Dara fields. Meanwhile, OPEC Plus is expected to stick to their plan to add 400,000 barrels per day of supply in February. Oil analysts have lowered their price forecast for 2022 as Omicron coronavirus variant poses headwinds to recovering fuel demand and risks a supply glut as producers pump more oil. And in the metals market, gold prices marked their biggest yearly decline since 2015, hemmed in by a resurgent dollar as investors prepare to usher in a new year, which the money supply could be tightened even as threat of Omicron coronavirus lingers. Spot gold was last up 0.4% at almost $2,000 per ounce, while U.S. gold futures also firmed at 0.5% to almost about the same amount. Gold has eased about 4% in 2021 as a recovering global economy pushed more investors towards riskier assets and curbed interest for safe haven assets such as bullion. Spot silver rose 0.6% to $23.17 an ounce, down over 12%, and platinum fell 0.5% to $956.50 en route to a yearly drop of more than 10%. Now let's look at the African continent. An increased electricity tariff took effect in Zimbabwe on Saturday. That's the first day of this year, 2022. The 12.3% electricity tariff increase announced by the Zimbabwe Electricity Transmission Distribution Company is expected to lead to price hikes and high costs of production for industry. Economists and even the ordinary citizens are complaining already and saying that the tariff announced by the Zimbabwe Electricity Distribution Company would lead to hike, and this might be too much for them. Well, let's find out what reactions are in Zimbabwe now. We have Nigel Yamatumbo joining us from Harare to tell us what's going on there. Hello, Nigel. Good morning, or I think you're an hour ahead of us, so good afternoon.
Yes, it's afternoon. How are you?
Great.
Compliments of the new year.
I wish you the same, Nigel. So, first of all, did you see this coming as citizens of Zimbabwe? Did the government give explanation? Did they announce the dates before this?
Well, definitely, it was a long time in coming because of the challenges within the Zimbabwean market, which there is one market that is government-driven, wherein they are trying to what pundits have been calling command economic, wherein they've been trying to really control inflation by trying to control the exchange rate between the United States dollar and the local currency. But what has been actually then happening is that it's been fueling the parallel market, which has been the fair market insofar as the real rates are concerned. So it is fictitious for anybody to really think that the Zim dollar as it stands is pegged at 105 as what the official rate per pot. What the electoral transmission body did was to simply tie the electricity rate with the prevailing market rate. That is the parallel market, which has more realistic value for them being able to retain foreign currency and really import electricity. So we've got a real fundamental market and economic challenges that are tied into this increase in the tariffs.
Well, so, Nigel, the major fear here, which, I mean, I think is also realistic, is the fact that prices would react to this, you know, and there'll be hike in prices. So between Saturday when it started and now, have you noticed a change in prices of commodities and services in the country?
Well, for once the electricity tariffs also followed the lead of the fuel prices, fuel hikes, which now are pegged anything between $1.40 to $1.50 per liter. And naturally, because electricity is an integral part of any production, of any cost insofar as the market and business is concerned. And there has been, I'll bet, yes, slowly a market response, but the market response largely is to trail the parallel market rate of the US dollar. And what we are beginning to see in Zimbabwe is the resurgence of hyperinflation, and which makes it prudent that perhaps re-dollarization could be the panacea in dealing with this tariff increases. Because as long as the market rate and the value and the demand for the US dollar continues to rise, albeit outside the formal structures, the formal banking structures, the formal market structures, the likelihood of the tariffs to be increased in February will still be there and realistic. The only unfortunate thing is that the civil servant, which form the bulk of the workforce in any country, and in Zimbabwe in particular, are still earned in local currency, and certainly the prices of electricity are beyond their reach.
Wow, well, Nigel, sounds like it's a long journey and a circle that has just started at the beginning of the year. We surely wish you guys the very best. And Nigel Yamatumbu is a journalist in Zimbabwe. Thank you so much for the update.
Sure, thank you, pleasure.
So we'll take a break now. When we come back, we have more stories from the African continent. To stay with us. It's Business Incorporated on Channels Television. You're welcome back. You're still watching Business Incorporated on Channels Television. Now, the Africa Development Bank Group projected that the African continents will recover from the blow of COVID-19 pandemic. Real GDP in Africa was projected to grow at 3.4% in 2021, after contracting by 2.1% in the previous year, that was 2020. The continent recorded a surge in government financing, debts and debt financing, and of course, the issue of vaccine inequality was a major issue all through 2021. Now, let's get the perspective of the Director of Macroeconomics and Governance Division at the United Nations Economic Commission for Africa, Mr. Bartholomew Armour, joining us from New York. Good afternoon, Mr. Armour. Thank you so much for joining us. Happy New Year.
Happy New Year to you. Hope everything is great on your side.
Great on my side. So the AFDB estimated that African governments needed additional gross financing of about $154 billion between 2020 and 2021 to respond to the crisis. How well would you say the continent responded economically to the crisis in 2021?
Thank you for having me on the show. Yes, the continent did a pretty good job in terms of responding to the pandemic on both the health dimension in terms of the resources spent on procuring PPE and also providing social support to people that were affected, the vulnerable and the poor. The estimates run about 100 million people have been thrown into poverty as a result of the pandemic. But you should also realize that the African economies didn't have the same amount of resources to respond. So the response was actually commensurate with the resource availability. So if you compare, for example, with the developed countries that have unlimited access to reserves and all the money that has been pumped into the system, the monies that have been printed that are actually contributing to inflation, you find that they had a bigger fiscal response. Now, the question then is on the vaccine side. Access to vaccine is going to be critical for any kind of durable recovery. Fortunately for Africa, the impact on the population in terms of the health impact has not been as bad as we thought it would be, given the state of the health services. So, but going forward, vaccine equity is going to be critical. And this means not only getting access to and meeting the COVAX threshold of 20%, which is really the minimum. Currently, only about 3% of the population has been vaccinated in Africa, compared to about 45% in Europe and other countries, or other regions. So it is important that we increase access to vaccines. Now, part of this problem, or solving this problem, would mean local production of vaccines. Now, while there's been some progress is happening in Africa. About 6 countries, Egypt, Morocco, Senegal, Nigeria, South Africa, Algeria, there's been some beginning of local production in those countries. But the problem is that there's currently really the issue of licensing. And secondly, what is happening is what is called fill and finish. That is, they import the products and they package it in these countries. So it's really simply similar to what you call the assembly mechanism in the importation of cars. What needs to happen going forward is actually the production of these vaccines in those countries, because that is what's going to avert some of these supply chain issues and also increase the availability of these vaccines. Hand in hand with that, of course, is the need to address issues of vaccine hesitancy. But those are issues that need to be addressed and will be fundamental to addressing the vaccine inequality in Africa.
So obviously the issue of inequality, vaccine inequality, hesitancy, local manufacturing, these factors would determine how 2022 looks like. So from your perspective now, what does 2022 look like when we take all these factors into consideration?
Well, 2022 will also depend on the kind of recovery that happens in the developed world, because don't forget that we export a lot of our products to those countries, to China, to the United States, to Europe. And so the extent to which those countries also
All right, seems like we lost Mr. Ama there. Apologies for that. Mr. Bartholomew Ama is Director of Macroeconomics and Governance Division with the United Nations Economic Commission for Africa. And he was telling us there about his expectations for the year 2020 for the continent of Africa. Well, looking at other parts of the continent now, Kenya's real GDP grew 9.9% in the third quarter of 2021. The growth is attributed to the easing of COVID-19 containment measures. The Q3 growth comes after an earlier impressive second quarter performance of 10.1% of real GDP growth of 2021. Then in Egypt, Egypt's Suez Canal revenues hit all-time high, recording $6.3 billion in 2021. The Suez Canal Authority, the government body that runs the waterway, said that the canal's revenues rose by 12.8%. And that's a $720 million increase from 2020, when the international waterway brought in $5.6 billion in revenues. SCA Chairman Osama Rabi said that the canal saw 20,694 ships crossing from both directions, compared to 18,830 ships in 2020. That's a 10% increase. The Suez Canal recorded a total net tonnage of 1.27 billion tons during 2021. That's an increase of 8.5% from 1.17 billion tons in the previous year. In March, remember, 2021, navigation in the Suez Canal was interrupted when the giant shipping vessel Ever Given ran aground and blocked the waterway for nearly 6 days. The incident disrupted the global shipping movement and halted the passage of hundreds of ships from the canal, incurring losses estimated between $12 to $15 million each day during the canal closure. Well, that's the program for today. Thank you so much for being a part of it. Let's do it again tomorrow. I'm Ini John Mekwa.